Join me as I dive into the world of SPXS stock and see if I can figure out if it's on the brink of an explosion. SPXS stock, also known as the Direction Daily S&P 500 Bear 3X shares, has been making waves in the financial community, and for good reason. As a popular inverse ETF, it's designed to provide 3x inverse exposure to the S&P 500 index, making it a go-to for investors looking to hedge their bets or take a position against the broader market. With market volatility on the rise, it's no wonder investors are keeping a close eye on SPXS. SPXS stock has faced its fair share of challenges in recent times. Market volatility has been a major thorn in its side, with wild swings in the S&P 500 index making it tough for the ETF to track its benchmark. And then there's investor sentiment, which has been largely bearish, given the uncertain economic landscape. This has led to a significant amount of skepticism surrounding the stock's potential for growth. Adding to the mix, the ongoing trade tensions and global economic uncertainty have only added to the market's jitters. The challenges don't stop there. SPXS has also been impacted by the broader market trends. As the S&P 500 index has continued to push new highs, investors have been flocking to more bullish plays, leaving inverse ETFs like SPXS in the dust. This has resulted in a steady decline in the stock's price over the past few months, leaving some to wonder if it's a good time to buy or if it's time to steer clear. Furthermore, the ETF's expense ratio and trading costs have also been a concern for investors, eating into potential gains. Despite these challenges, some experts believe that SPXS stock could be poised for a turnaround. With the market's volatility likely to persist, some argue that the ETF could see a surge in popularity as investors look to hedge their portfolios. Additionally, any unexpected downturn in the market could send SPXS soaring, making it an attractive play for traders looking to capitalize on a potential decline. However, it's essential to keep in mind that this is a high-risk, high-reward play, and investors should be cautious. A closer look at market trends reveals that investors are increasingly looking for ways to protect their portfolios from potential downturns. This has led to a growing interest in inverse ETFs like SPXS, which could see a significant influx of capital if the market were to take a turn for the worse. Expert opinions on the stock are mixed, with some seeing it as a valuable hedge against a market decline, while others view it as a speculative play that's not worth the risk. One key insight to consider is that SPXS stock tends to perform well during times of high market volatility. With the SIBO Volatility Index, also known as the VIX, remaining elevated, it's possible that SPXS could see a boost in the coming weeks. If the market were to experience a significant downturn, SPXS could be poised to explode higher, making it an attractive play for traders looking to capitalize on a potential decline. In recap, we've discussed the challenges facing SPXS stock, including market volatility and investor sentiment. We've also explored the potential for growth, driven by market trends and expert opinions. Ultimately, the decision to invest in SPXS stock comes down to one's risk tolerance and investment goals. So, what do you think? Will SPXS stock explode higher, or will it continue to struggle? Share your thoughts in the comments below. If you're interested in more stock insights and analysis, be sure to check out my other videos for the latest news and trends.